Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A fourth bullish white soldier yesterday, and a continued follow-on higher to Friday's possibly seminal key reversal up. This time the market punched up through the upper time, currently at 98.78 of the recent June to August bearish pitchfork. There had been an offshoot lower from the earlier big old January to May 2021 broken bearish Andrews pitchfork. It also punched up through its partner, the declining short medium moving average, currently 99.12, and the significant February to date downtrend, currently 99.41. Thus, this is a major reactionary bullish move, if it can be sustained. A first step towards that was yesterday's close over all those resistances. There are two key features now to look for in the market overhead. Firstly, and it sounds obvious, is the key parity level, the big one even number. Not just because of the round number, but because it could also be part of an ascending triangle pattern formed over since late September. Personally, I blame cable, sterling against the US dollar, for this, because I first saw such a similar pattern there, but further developed, and hence started to look for one here. Ideally, for this pattern to form, we'd need a rejection or hold at the one even level, but not as far as the 97.5 area, and then for the market to make up its mind on which direction. However, bearing in mind that this is not a science but an art, be on the lookout for a preemptive move. The size of the primary move would be about 315 on ticks on top of the upper trend line, which is currently at one even, or 200 ticks off the lower trend line, currently at 97.14. The only problem with all this is the ascending triangle is in the wrong place. It should be after a move up, not down. Secondly, start looking now at the declining medium moving average, currently at 100.93. This is coming down to reinforce the late August and September congestion between 99.5 and 100.50. Beyond that, we have nothing to note until the November 2002 high at 101.70. Now, so far today, a break above the one even level. Watch now to see the medium moving average intersect with the market. Cable, aka sterling against the US dollar. A reactionary bullish white Mariposa yesterday that has drawn my attention to a new pattern. See, until recently I had spoken about the key drivers lower in this market. They were the mid-September to early October bearish shift pitchfork, plus the broken May to July bearish shift pitchfork. However, I had time to study the action over October in some depth recently, and I noted a newer pattern, one that is making those two redundant. It is an October-based ascending triangle, currently 111.17 to 115.03. And yesterday's action was the second test of that upper flat trend line of this pattern. That test yesterday broke up through both the previous pitchforks, as well as the March 2020 low at 114.02 and the October 2016 flash crash low at 114.5, as well as the partner to the pitchforks, the declining short medium moving average, that's currently at 114.40. In an ideal ascending triangle pattern, we'd now see a halt or a drop off, but only a maximum down to the 112 area before a definitive move in the next major direction. This being an art rather than a science, one should look for a preemptive move just in case. The size of the primary move will be about 520 ticks on top of the upper trend line, currently at 115.03, or 325 ticks off the lower trend line, currently 111.17. The only issue with all this is the ascending triangle is in the wrong place. It should appear at the end of a move higher. There is one further thing to look for now on the top side, and that is another paralleling to the pitchforks. It's the declining medium moving average, currently at 117.41. It will not take that long to move down to test the market. Now, so far today, a break above the upper trend line of the ascending triangle. Now look to see how the market intersects with the declining medium moving average. Euro sterling. An immediate countering bearish dark cloud cover pattern type yesterday as the market tries to offset the previous session's unusual bullish engulfing pattern. The action also counts as the previous session's not only breach but also close over the recent overhead cap of the April 2021 high at 87.19. Interestingly, the base of yesterday's action was the same as the previous session, and in many of the recent sessions it was the rising short medium moving average, currently at 86.62. This looks like a reasonable support right now, especially on a closing basis. Looking above, we still have some recent congestion from early October between 87.69 and 87.80, and then nothing until the 50% Fibonacci line of the March 20 to March 22 move at 88.51. Overall, we continue to remain within the same April to August bullish Andrews pitchfork, in between the lower time below, currently 86.21, and middle time above, currently 88.90. So far today, a dip below the combination of the April 20 low at 86.69 and the rising short medium moving average, which had recently seemed such a solid support. It is not entirely a wholehearted affair, but watch now for the support of the lower time and the medium moving average below that, currently at 85.94. US dollar against the Indian rupee. A counter to the counter bearish engulfing pattern yesterday as the market continues to explore the possibilities of the September to date ascending expanding wedge pattern. That's currently between 82.41 and 84.35. Prices have moved down towards the lower trend line and the October base support that lies just below between 82.13 and 82.36. Interestingly, the early October high at 82.82 has once again acted as a cap. So far today, a small dip to the lower trend line, but no more at this time. We are still within the ascending expanding wedge pattern. US dollar against the Brazilian real. A long-legged yet still indecisive spinning top yesterday, which while higher is a less decisive action than the previous two sessions of a large key reversal down followed by an even larger immediate countering bullish opening long white Marabozo. Interestingly, the market used as a base the 50% Fibonacci line at 527.37, the May 20 to April 22 move, which had earlier been a cap on prices. Below, we have what I have called recently the really heavy forces of the rising medium moving average, currently 523.29, and the lower time, currently 520.73 of the late May to late August bullish shift pitchfork. They have been breached over last weekend, but yesterday's action may be at least temporarily a patched repair. Some might recall I had pointed out how this previously breached but seemingly unbroken as yet late May to late August bullish shift pitchfork. This bullish pitchfork is the current key driver here right now. Looking above, we have a lesser Fibonacci line at 538.13 and what might be a stronger resistance at 543.81. US dollar against the Mexican peso. A bearish engulfing pattern yesterday, coming as it did after the previous session's possibly inverted hammer pattern, and making a new low for October. The market continues to travel down the outside of the broken upper time, currently at 1984.03, of the March to July bearish Andrews pitchfork, and towards the middle time, currently 1982.18, of the bearish shift pitchfork for exactly the same move. This segues nicely into something I've been warning about for a couple of weeks now, and I quote, "Yet I suspect it may still be significant. You see, the reason I've taken pains to highlight these two times, these last few weeks, is that in about a week's time," let me refresh that, it's now coming up Friday, this Friday actually, but I'll carry on. "In about a week's time, they will cross over. And for those who know me, well, that is when I say, look out. Look out for one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it's worth watching out for what happens on or around the 28th of October. You can see the crossover within the red circle on my daily chart." End of quote. In the bigger picture, the market has continued base building since mid-August, between roughly 1990 and about 2020, with occasional, such as yesterday, forays outside. This is still the picture, with no significant feature developing in either direction, or at least that is what I'd normally say. However, I had started to look at the action since August as possibly having elements of a rounded bottom, which includes that rising bump from 3 weeks ago, even if altogether it's not such a great looking pattern. Well, this recent action puts that into doubt. So far today, a little dip today, but still running along the top of the broken upper tine and coming closer to the middle tine and the crossover. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.